Welcome back, students who are taking financial accounting, and we are working through the Chapter 1 short exercises, and hopefully I'll get through the last three problems, through the last three exercises in this video. Okay, and as always, if you don't understand something, watch the video again. If you still don't understand, feel free to contact an instructor. All right, short exercise 1-12. It says here, Action Power Sports Corporation sells and services personal watercraft. The business experienced the following events. State whether each event A. increased, B. decreased, or C. had no effect on the total assets of the business. And identify the assets involved in each transaction. Okay, so number one, Action Power Sports sold additional stock to stockholders. Okay, so if it's selling stock to stockholders, that means it's receiving cash. Okay, cash is an asset, so I'm identifying the asset as cash, and I'm increasing my cash. Okay, cash is going up. Right. Paid cash to purchase land as a building site. Well, if I'm paying cash, that means I'm going to be using cash, and cash is an asset, and since I'm paying it, that's a decrease in my cash. But what I'm doing is I'm purchasing land. Okay, so I'm also affecting land, and land is an asset, so I'm increasing my land account. Paid cash on accounts payable. Okay, so again, I'm using cash, right? Cash is an asset, and since I'm paying it, I'm decreasing it. And I'm using it towards an accounts payable. Well, payables are liabilities, so I don't need to identify that. So I only have a decrease in my cash account. It says number 4, purchased machinery and equipment, signed a promissory note in payment. So if I'm signing a promissory note in payment, that's a notes payable because it's something that I still owe. Okay, but I'm purchasing machinery and equipment, right? So I would just generally call this equipment, all right? And that would be the account, and I would be increasing the account, okay? I could call it machinery and equipment. There's other treatments. I can actually have one account called machinery, one account called equipment. It all depends upon the business, all right? But in either case, I'm increasing my machinery and equipment account, or my equipment account. The notes payable here, it's not part of the assets, right? Because it's something I owe. Number 5, perform service for a customer on account. Well, if I'm performing a service, right, that's revenue, right? So I don't need to worry about that. And since it's on account, that's an accounts receivable. And of course, if my accounts receivable was 0 and I'm performing the service, that means my accounts receivable increased. So I have an increase in accounts receivable. Right, 6, paid cash to the stockholders as a distribution of earnings. Okay. So if I'm paying cash, well, I know that cash is an asset, and since I'm paying it, that's a decrease. And a distribution of earnings, well, earnings comes out of retained earnings, okay? And retained earnings is on the equity section, so that's not applicable here. So I have a decrease in my cash account, okay? Number 7, received cash from a customer on account. Okay, so if I'm receiving cash, cash is an asset, so I'm increasing my cash. And since it's on account, the on account is an accounts receivable because the customer owes me. And an accounts receivable is an asset, okay? But I'm decreasing my accounts receivable, meaning before, let's say the customer owed me $100 and now he's paying me $50, okay? Well, my cash is increasing, right? Because he's paying me the $50, right? But now he owes me $50, less, which means he only still has a $50 balance on his account, so my accounts receivable decreased. So in this case here, my cash increases and my accounts receivable decreases. Right? Sold land for a price equal to the cost of the land and received cash. Okay, so am I affecting cash? Yes. Okay. And am I increasing my cash? Yes. Right? Because I'm receiving the cash for the land. Now, the land was also an asset. Okay. And we saw that back up here for number 2. Okay. Land is an asset. And if we had a $100,000 piece of land and we sold it, right, we no longer have the $100,000 piece of land, so our land decreased, our land went down, the balance, of that account went down, so I have a decrease for land, right? Borrowed money from the bank, right? So if I'm borrowing money from the bank, right, well, I'm receiving cash, and I'm increasing my cash, right? But since I'm borrowing it, that would be like a loan payable, right? Or a note payable, right? And that's something that I owe because I'm borrowing it, and that's a liability, so I don't have to worry about that, okay? For this particular exercise, right? Right, 1-13. Presented here are 9 transactions and the analysis used to account for them. Evaluate each of the suggested accounting treatments and indicate whether it is true or false. Okay, so I'm receiving cash of $41,000 from the stockholders who bought stock in the business. Okay, my answer, I'm increasing my asset and I'm increasing my stockholders' equity. So is this true or false? Well, if I'm receiving cash, that means I'm increasing cash, and cash is an asset. So I am increasing my asset. From stockholders who bought stock, okay? Well, if there was 0 stock before and they're buying $100,000 worth of stock, my stock increases. So it's an increase, and since stock is an equity, stockholders' equity. So this here is true. My asset increases because cash increases, and I have an increase in stockholders' equity because I'm selling the stock. So the answer to that one would be true. Okay, number 2. Paid $600 cash to purchase supplies. The answer, I'm increasing an asset and increasing stockholders' equity. Well, if I'm paying cash and cash is an asset, my cash is going down. Okay, so my cash is decreasing. So immediately this is wrong. And I'm purchasing supplies. Well, supplies, I would own them. Okay, so that is an asset. It's not stockholders' equity. So this particular one is false. Okay, 3. Earned service revenue on account. I'm earning service revenue on account. So I'm increasing an asset and increasing retained earnings. Okay, so on account, all right, ask myself the question first. Am I affecting cash? No. Okay. If I'm not affecting cash, am I affecting accounts receivable or accounts payable? Yes, right? And since I'm working with revenue, that's an accounts receivable. So my accounts receivable is increasing to $1,200. So I'm increasing the asset. Now it says here, am I increased retained earnings? Well, if my service revenue goes up, okay, and as part of the expanded accounting equation, remember assets equal liabilities plus equity, but they considered equity when we expand it as an increase in revenue and a decrease in expenses, okay? If I'm increasing my revenue, that means I'm increasing my retained earnings because revenues less expenses, that profit or loss gets closed out to equity. So if I have an increase in revenue and I don't affect my expenses at all, my revenues go up, and that revenue going up would mean my equity would go up. So in this case here, this is true. You realize that all we're doing here is we're just trying to hammer home, whether we understand the different categories of accounts, what they're used for, and whether they increase or decrease, okay? Because it's not cookie cutter, it's a relationship, okay, between the category of account, the debit and credit, and the normal balance. Okay, when you look at these things, those three parts all have a relationship as to what happens with making a journal entry for a transaction. Okay, 4, purchased office furniture on account at a cost of $450, an increase in an asset, an increase in a liability. Okay, so if I'm purchasing office furniture on account at a cost of $450, am I affecting cash? No. Well, if I'm not affecting cash, am I affecting accounts payable or an accounts receivable? Yes, because it's on account. Well, I'm purchasing office furniture, so this here is an accounts payable, and I'm increasing my accounts payable going from 0 to 450. So I have an increase in a liability. But what am I purchasing? Office furniture. Well, am I going to own that furniture? Yes. All right. So office furniture is an asset, so I'm increasing my asset because I didn't have any before and now I do. So this here is true. Okay, 5. Received cash on account for $1,500, an increase in an asset and a decrease in an asset. Okay. So my first question is, am I affecting cash? Right? Yes, I am. I'm receiving it, so I'm increasing my cash. If I'm increasing my cash, remember when we were talking about making a journal entry, debits must equal our credits, right? So if I'm increasing my cash, that's a debit, right? I have to credit something else. Well, what am I crediting? It's a payment for I'm receiving cash for something on account, which was an accounts receivable. Somebody owed me $1,500, right? Well, if they owed me $1,500 and now they're paying it, that means my accounts receivable decreased. And since receivable is an asset and that amount is decreasing, I'm decreasing my assets. So this statement is true. I'm increasing my cash. I'm increasing an asset, which is cash, and I'm decreasing an asset, which is accounts receivable. Right, number 6, paid cash on account, 175. Right, increase an asset, decrease a liability. Okay, so if I'm paying cash on account, am I increasing or decreasing my cash? I'm decreasing it. And I know that cash is an asset, so I can't be increasing the asset, so this immediately becomes false, right? This would be a decrease. It would be a decrease to the asset. And my liability would also be decreasing because since I'm paying down my debt, right? So it would be a decrease to my liability, right? So this one is totally incorrect, I'm sorry. All right, number 7, sold land for $68,000 in cash, which was the cost of the land. Okay, so if I'm selling the land, all right, I have an increase in an asset and a decrease in an asset. Now this is very similar to this previous exercise on 112 where number 8 here, right? I have an increase to cash and a decrease to land. Okay, well, I'm selling the land for $68,000 in cash, which means cash is an asset, right? And I'm increasing my cash, so I'm increasing my asset. And what am I selling? I'm selling land, which was also an asset. And since I no longer have it, it's a decrease. So the land is an asset, and I'm decreasing that asset. So this statement is true. Number 8, performed services and received cash of $825. Increase of an asset, an increase in revenue. Well, am I affecting cash? Yes. Cash is an asset and I'm increasing it, so I'm increasing my asset, which is true. And I'm performing services. Well, if I had 0 in my services account, before, right? And I perform the services, that means it goes up. So there's an increase. Well, services is a revenue because I'm making a sale, so I'm increasing my revenue. So this is true. And number 9, paid monthly office rent of $1,500. Okay, so I'm decreasing an asset and increasing stockholders' equity. Well, if I'm paying rent, am I affecting cash? Yes. So if I'm paying the cash, I'm decreasing cash. So that part's true, but I'm paying monthly rent, right? I'm paying rent, right? Is rent an equity account? I mean, my rent expense account is increasing, right? Because before it was 0, and if I pay it, let's say it's $1,000, it's going up to that rent expense account is going up to 1,000. But the question is this account a stockholder equity account? And no, it isn't. Okay, it's an increase in the expense account. All right. So in this case here, this statement is false. All right. And now I'm at 16 minutes, but I only have one more to go. So let me look at this. So pay no dividends. Okay, I'm going to stop and come back to this last problem in the next video.